Think about what a credit card actually does for you. It hands you money you do not have. It lets you pay it back later for free. It gives you cash back, points, airport lounges, even free flights. It is basically a company begging to give you free stuff. So here's the question that makes no sense. If they are giving all of that away, how do credit card companies make some of the biggest profits in the entire world? We are talking hundreds of billions of dollars a year from a piece of plastic that seems to only ever give you things. Somebody's paying for all of this. The free money, the points, the perks. It is not free. It never was. And once you see exactly who is paying and how, you will understand one of the most brilliant and quietly ruthless money machines ever built. There are three ways these cards make their money. One of them is a trap that catches millions of people. One of them makes you pay even when you use cash. And one of them is pure psychology working on your brain right now. Today, we break down exactly how credit cards actually make their billions, drawn simply. And by the end, you will know how to use them so that you win instead of them. Let's get into it. First, let's understand the strange deal a credit card offers you. When you buy something with a credit card, the bank pays the store for you right then. Then they send you a bill at the end of the month. And here is the generous part. If you pay that bill in full, they charge you nothing. Zero interest. They basically gave you a free short-term loan and even threw in some rewards for using it. So on the surface, it looks like the customer is the one getting the great deal. And for some customers, that is exactly true. But the credit card business is not built on those customers. It is built on three hidden engines running quietly in the background. And the biggest one by far is a single word that has trapped millions of people: interest. Engine 1, interest. This is the giant, and it is where most of the profit comes from. Here's how the trap is set. Remember how the bill is free if you pay it in full? Well, most people do not. And the moment you do not pay the full amount, everything changes. Now you are borrowing that money, and borrowing on a credit card is shockingly expensive. Credit cards charge some of the highest interest rates in all of finance, often 20, 25, even 30% a year. Let that sink in. If you leave $1,000 unpaid on your card, they can charge you $300 a year just for carrying it. And now for the most cleverly evil part of the whole system, the minimum payment. Every bill shows a tiny minimum payment you are allowed to make. It looks like a helpful little number. It is actually the trap door, because if you only pay that minimum, you barely touch what you owe. Almost all of it just gets eaten by interest. Watch this. On some cards, if you owe a few $1,000s and only ever pay the minimum, it can take you over a decade to pay it off, and you can end up paying back above what you borrowed. That is the machine. They dangle rewards to get you spending, hope you slip and carry a balance, and then that balance quietly prints money for them month after month, year after year. The person who carries a balance is not the customer. They are the product. Engine 2, swipe fees, and this is the one that makes you pay, even when you use cash. Here is what happens invisibly every time anyone taps a card. When you buy a $5 coffee with a card, the shop does not actually get the full $5. A small slice, usually around 2 to 3%, gets taken by the card networks and banks. It is called an interchange fee, and the store pays it on every single card transaction. Now, 2 or 3% sounds tiny, but multiply it across billions and billions of purchases every day all over the world. It becomes a river of money flowing to the card companies, whether or not anyone ever pays a cent of interest. But here is the sneaky twist that affects everyone. The stores are not just going to eat that cost. So they quietly raise their prices for everybody to cover the fees, which means even if you pay with cash, you are still paying a hidden card fee baked into the price of the coffee. The card companies figured out how to take a cut of nearly every purchase on earth. Cards or cash, you are feeding the machine. Engine 3, pure psychology, because the card is designed to make you spend more than you would with cash. This is not a guess. Studies have shown it again and again. People spend significantly more when they pay with a card instead of cash. Why? Because handing over real, physical cash hurts. You feel the money leaving your hand. Your brain registers the loss. But tapping a card, you feel almost nothing. It is painless, invisible, abstract. The pain of paying is switched off. So you spend more freely, buy the bigger size, add the extra thing, without that little sting of reality. And then there are the rewards, the points, the cashback, the miles. They feel like a gift. They are actually bait. Because chasing rewards makes you spend more to earn more points. You end up spending $50 to earn $1 back and calling it a win. The rewards are not the card company being generous. They are a clever tool to keep you swiping, spending, and hopefully one day carrying a balance. Every part of the card is engineered to switch off the part of your brain that says, maybe I should not buy this. So step back and you will see there are really only two types of credit card users, and they live in completely different worlds. Type 1 pays their card in full every single month, never carries a balance, never pays a cent of interest. For this person, the credit card is a genuinely amazing tool. Free short-term loans, real rewards, points, protection. They are winning the game. Type 2 carries a balance. They pay the minimum, roll the debt forward, and slowly drown in that 25% interest. For this person, the credit card is a quiet financial disaster, bleeding them a little more every month. And here is the wild part. The card companies actually make money off both of them. From Type 2, they make it through crushing interest. From Type 1, they make it through the swipe fees on all that spending. The whole system is designed so the company wins either way. The only question is which type of customer you choose to be. There is one more piece to this machine, and it is the cleverest hook of all, your credit score. A credit score is a number that says how trustworthy you are with borrowed money, and your whole financial life secretly runs on it. It decides if you can rent an apartment, buy a car, or get a mortgage, and it decides how much interest you pay on all of it. And here's the twist. The main way to build a good credit score is to use credit cards. So you are basically forced to play the card game just to be considered a responsible adult. The companies know this, so they target you young, offering your very first card the moment you turn 18, often with a free gift or some points to reel you in. They want to hook you early, before you understand how any of it works, because a customer who gets their first card at 18 might carry cards and pay fees for the next 50 years. And here is the trap inside the trap. To build a good score, you have to use the card, but using it is exactly what tempts you to overspend and slip into a balance. So the very thing that builds your credit is the same thing that can quietly sink you. The system is designed so you almost have to play. The only real choice you get is whether you play it smart or become the product. So how do you make sure you are Type 1, the winner, and not Type 2, the product? Rule 1, and it is the only rule that really matters. Pay your card in full every single month. Never, ever carry a balance. Do that and you flip the whole machine around. You get the free loan, the points, the perks, and the protection, and you pay them nothing back in interest. Rule 2, ignore the minimum payment. Pretend it does not exist. It is a trap, not a target. Rule 3, do not chase rewards by spending more. Spend exactly what you would have anyway, and let the points be a small bonus, not a reason to buy. Treat the credit card like a tool, not free money. Use it and pay it off. Then it works for you instead of on you. The whole business is built on people slipping up. So the entire secret to winning is simply to not slip. Be the person who uses the card, never the person the card uses. If you want to see the money machine behind everyday life, subscribe. We break it all down, drawn simply. I will see you in the next one.